So historically, it would signal that we're heading into a recession 12 to 18 months from now, but I would be cautious on that data because of the war. You've got two conflating things happening at the same time. The ending of the pandemic, or at least the lockdown procedures in most of the world, and you've got the uncertainty about a ceasefire potentially in Ukraine and Russia. And I think that has to abate, Dan, before we can really look at and analyze the data and determine whether or not it's consistent with the historical guidance and the indication of a recession. I'm not quite convinced that there'll be a recession. The economy is booming around the world. The inflation data is high because of the supply chain disruption, but also the Federal Reserve's induction of all that capital as a result of the crisis, the COVID-19 crisis. So for me, I want to be cautious, and I'm still very optimistic about the U.S. economy specifically and the overall stock market.
So is that why we're seeing equities take some of this caution in the bond market in their stride? And if that is the case, how much longer do you think this momentum can continue, particularly in a rising rate environment?
Well, again, I think some of it is from the war. So the first 2 months of the year, some of us, I got it wrong. I didn't expect the Russian invasion of Ukraine.
I don't think anyone did.
Yeah, I think that was something that seemed very irrational to me. And so you lost capital in the months of January and February. We're starting to get a rally here because they think that war is coming to an end. And then it'll be more consistent with where economic growth is and where earnings are coming out. So to me, I think all of this stuff is sort of short-term noise in the system. I don't see the signal yet for the for the recession, but we'll see. Listen, I've been humbled by life and markets, Dan, so I've been often wrong, but I'm never in doubt. Let's just put it that way.
Humbled by life and markets.
Yes,
Look,
exactly.
Fair to say, Mooch, fair
Right.
to say. Talk me through the Fed narrative as well. I talked about this rising environment of rates that we see right now. Do you think the Fed has a credibility here when it comes to the current hiking trajectory, or are investors getting this wrong?
So I do. So I'm in the camp. Perhaps the word transitory was the wrong word, but I've been going around speaking at conferences, being on panels, some of them remote, some of them in person, and the general consensus is the Fed has it wrong. They're way behind the curve. There's systemic inflation in the system of 7.5%. Now, I don't see that. Again, I want people to step back and reflect on what happened with the supply chain disruption. It's not an on and off switch, Dan. We can't just say, okay, let's shut it off. We're going into a lockdown situation. Let's turn it back on. You then have the contributing factor of the Chinese with their zero COVID strategy, which are having these sort of rolling lockdowns throughout their different cities and hampering their factories. So to me, I think all of this stuff is related. As it starts to normalize, you're going to bring that inflation back in line. Moreover, you have so much new technology coming on the scene, the introduction of 5G, robotics, all of this great stuff, Dan, that is usually, in fact, always deflationary. So to me, I think we'll be sitting here, hopefully you'll invite me back on, we'll be talking about the surprise in the lowering of U.S. inflation. So they will be raising rates. They will not raise rates as much as people expect. And perhaps the word transitory was the wrong word, but this is not permanent systemic inflation.
It's interesting to see how all of this is playing out as well, particularly when you look at the political context right now too. And I wanted to get your take on what we're seeing stateside. Confirmation this week that President Biden's approval rating is now at the lowest level since the start of his presidency amid war and inflation fears. Why do you think Americans aren't rallying around the president in this environment?
Well, I think they're exhausted. They've had a 2-year struggle with COVID-19. I think the gas prices in the United States are effectively a regressive tax for a lot of people. And I think it's putting a lot of pain in people's pocketbooks. Discretionary spending, we thought would have been way higher by now. That's not there. People are losing their savings again. If you look at those savings rates during the COVID-19, they're up at 23%. They're down now, but they're not going to luxury spending or discretionary spending. They're going to make up for the impact of inflation. I think that's got people frustrated. I would point out to people that no matter who the president would be, if you induct a 42% increase in the money supply, M2 in the United States, it's going to show up in prices, just invariably. And then, of course, you have the supply chain issue. So what happens, unfortunately, the presidents and political situations is things get very personalized to them, even though they're just cyclical, situational things in the economy. So, listen, it augurs poorly for him for the midterms. But just remember, Barack Obama got shellacked in the midterms, to use his own word. President Trump lost the midterms, but Obama went on to win the re-election. And so we'll have to see what happens. My guess is the Republicans are going to take the House back for sure. I think that's the most likely result of all.